Alright guys, how's it going? This is my second take of this video. Anyways, I wanted to touch base on inflation and just want to look at the stock market in general. Okay, if you look at the bond market has been selling off sharply for the past few months, ever since the vaccine rollout came about. Bonds have been selling off. Yields have been going up. And, I've been shorting the TLT, for the past few months. And, that trade has worked well. Last year, there were fluctuations. Sometimes it went up, and then it went down, went up, down, it was volatile. And what I did notice last year, I did a video, and I noticed at 130, 139, the TLT actually rallied. Because what happened was last year, the TLT went to 180, and then there's a huge sell-off in the bond market, went to 139, then it went back to close to 180 TLT. And then now, we saw a move from basically, again, 180 to about 138-ish. And bonds at that moment started to rally. And I do believe, even though the bond market was pricing in inflation, more inflation will come about. I went long actually this week for the TLT. I'll probably take some profits, but I'll have to assess at what moment now. If we see a crazy run up in bonds, I'll just take some profits and then reshort the bond market. Because ultimately, let's get this straight, the vaccine is coming out, and because of the vaccine, things should, I'm not going to say they will, they should start to open back up, especially in the blue northern states where things are not fully open. If you go to the South is pretty much fully open. Restaurants, they're open. Maybe in some liberal districts they're not, but I head to the South and everything was open. You just have to do temperature checks when you get in, and sometimes you have to wear a mask depending on the restaurant. But inflation is on the way. It already was on the way when they printed all this monopoly money and it went into collectible goods. I told you about how card prices have gone bananas, fine arts, and, now the digital space, digital collectibles. I still am not a fan of that. I did a video the other day about it. Even though there will be some items that will go up, we'll have to reassess in the next few years. But, my wife and I are involved in selling card products, sports card products, and I'll show you one of the items. This is bent over here, but these are soft penny sleeves. We couldn't sell these because obviously they're bent. Anyways, you put these baseball cards in here and to basically protect them, and then another layer of protection is putting it in a top loader, a harder plastic. So, long story short, with these, we started to buy them in March of last year, and we noticed that these were selling really quickly, and we're able to get a bunch of them on the cheap because we buy them in bulk. But now the prices have gone up about 60%. Still, it's relatively cheap compared to other products out there, other competitors. But at the same time, that went up in price. And the question is, or just analyzing, if they're raising prices on my items, right, because of inflationary costs, what's happening to other industries as well? Prices are going to go up for regular consumers. And not only that, besides the money printing from last year, the Democrats are going to unveil a stimulus plan of $1.9 billion or trillion dollars. Now, that could be compromised and a little lower, maybe $1.1 trillion when it's all said and done. but it's going to be over $1 trillion most likely. And with that, you're creating more inflationary pressures. So, ultimately, this is good for the stock market, in my opinion, for the next few years. It's good for selling bonds, probably for the next few years. And also for the cards market that I'm involved with. And if you also want to look at the yield curve is positively sloping. Fed funds rate is close to 0. The 10-year rate is 1.3 something, 1.4, So it's over 100 basis points in the positive direction. So that's good for the overall stock market. But that being said, eventually inflationary pressures will hurt the stock market in the next few years. There will be an inversion of the yield curve where everything then will crumble down. But in the meantime, I believe the S&P 500 is going to be strong. I also believe miners are going to be due for a good run up now. The GDX is at $31, and with the bond market cooling off a little bit, this could bring momentum to this space, and also future inflationary pressures and the stimulus bill that's coming about, which I talked about earlier, Biden stimulus. So ultimately, this is probably a good time. Last week I saw the stock market go down. I was accumulating some long positions, in gold, in the S&P, some strong stocks as well, even looking at some collectibles that I bought through my account. So this should be a good next few years. However, we should watch out when the Fed starts to unwind this yield curve, starts to unwind all of the stimulus, takes the punch bowl away. Then it won't be fun. That's when I'm going to start to sell, or a little before then I'm going to start to sell some of the common cards that I have. So yeah, inflation's on the way. What do you guys think? What are your opinions? Thanks. I'll talk to you later. Bye.